Hey guys, hope you had a good day. I actually had a better day today than I did yesterday, due to the fact I think because I was a little bit more prepared for it, the speed and watching the market. So today was a little bit better than yesterday. But the market was choppy. It had its moments where it broke out and really pushed to like the sell off at the end towards the end of the market. It had things like that, but for the most part, it was choppy. I mean, it dropped here, then it chopped around for about until it broke out in these areas for about an hour and a half, you can say. And the reason because it chopped around, you have to expect that on days when you have trend days like yesterday. I consider yesterday a trend day. When you have days like that, you're going to have two dynamics come into play. You're going to have longer term traders who's you had yesterday. You have some who missed the short, so they want to jump in and get short. They want to position themselves for short. And then you have some longer term traders that want to get long, and they feel like this is a great area to get long. So you had those two dynamics going back and forth. So you're going to have a lot of oscillation back and forth, kind of what we had today. Not really making his mind up, and you break sometime, and that's kind of the dynamic that you had today with the market, just oscillations back and forth. That's why it was pretty choppy. It went through moments. It was choppy, then it broke out, then choppy. Um, but then I want to talk about the dome. I got a question about the dome, and and over the last couple of days, the dome has been moving fast. It's been moving extremely fast, hard to keep up with if you're just now starting to look at the dome. Okay, and let me explain what's going on. The market's a little bit thinner, and you say like, how is the you look at the dome. Normally, it's thick levels on each side, especially with the ES. But then you look at the dome, and the levels are thinner. And you look at the end of the day, you look at the daily volume. We almost did 3 million contracts today. We did almost 4 million yesterday. So you look at that and you say, how is the dome not thick and the daily volume is that high? Well, what's going on is they're doing aggressive limit orders, and let me tell you why. First, let's get to the essence of how, like, when there's a big trader, and they're big traders, they operate a little bit differently than us, obviously, us retail traders. And say they have 5, 10,000 contracts, and let's use this right here, and they want to go short the market. Okay, they can't just come step in and say I want and buy and sell 10,000 contracts at the market, because it would probably sweep a couple levels and it would get horrible price. So what they have to do is they have to do what work orders. They have to work both sides of the market. Okay, so if they, and you hear me say this sometimes, they buy when they really want to sell, and the reason why they do that is because they're working. They want to get short, so they're working the offers on this side. So what they do is they buy a few on this side to bid the market up, and then you would see spoofing. You hear talk about it all the time, like spoof the market, spoof. What they really want to do is spoof the market, and for people to join in and jump so they can start bidding the market up. And while they're on the other side of the offers, and they're just accumulating their position. Okay, and that's the reason why they spoof, because they want to spook the market up so they can accumulate. Because think about it, and now in today's market right now, if they had an order that close to the market and they don't really want to get long, they can very well get executed because the volatility is just flying around. So, and that's why you don't see a lot of heavy orders on each side, guys, because they don't want to get executed. They just don't want to get executed on orders they really don't want. So they you're just seeing a lot of aggressive limits, and they can't go market because the market's going really aggressive. So they're aggressively limits. So that's why volume's up, but the market, the dome is not thick like that, because it's just too dangerous for them to spoof the market and get executed on trades they really don't want. But and that's just how the market works. And another thing I wanted to talk about, that I was talking to this trader that I mentor, and he's going through the process where he's building his trading plan, and he's building it, and I talked to him, and he makes things a little bit more complicated. I mean, I was there, I made a lot of things really complicated, but once you break the market down to just try to make it simple as possible, it's not, but try to make it as simple as possible. And what I mean by that is there's only a couple ways you can trade when you're intraday. And I'm speaking of intraday trading. I'm not talking about longer term position spreads. I'm just talking about intraday trading as a retail trader. You can trade with the trend, or you can counter trend trade. Trading with the trend entails playing pullbacks and an existing move. You just market pulls back. You're trying to time it. You're trying to play trend, and or you're playing breakouts in order to play the trend, or you're playing counter trend. That's pretty much all you can really do. So, and I kind of try to explain this to them. Don't make it more complicated than what it is. And then another thing I like to tell them is create a bias. I don't care what tool you use. Like I use Fibonacci, or sometimes and I have a trader who likes trader I talk to. He likes to use moving averages. He doesn't use them in a normal term. He just uses it as a bias line, above and below, and he does it with a little bit of a higher time frame chart. He does that, and it works for him. He has a bias, and that way you cut off one side of the market where you're not just like trading off the seat of your pants. Like okay, I'm gonna long here, short here. It's pretty tough to trade like that, especially in a fast moving market like now. You can really get run over. And another thing that I like to talk about, and like I'm gonna tell you guys at the beginning of the market, I was long biased and I was taking longs. But the great thing about the way I trade is, and this is why I like to preach scaling out, is I was getting into positions and I was scaling out, and the volatility it's high right now, so it was easy for me to hit my first two targets. Boom, boom, boom. Now if you look at the beginning, my direction was wrong, but my bias never changed, and I actually caught this move, this nice I caught this move here. But the thing is, on this down move, I think I got stopped out one full time, but the other times I was hitting my first two targets because of the volatility. That's why I preach scaling out, because it's just you scale out, you take the pressure off yourself, so it's a mental edge, and you take the pressure off, and then it's like even if you're wrong, you took some of the risk off, and it's okay to be wrong. It's okay to be wrong anyway when you trade, but now you take some of the risk off. So that's the reason why I scale out, and it worked for me well today, and I really didn't get run over too much. But yeah, and those are a few things I wanted to talk about. Try not to make trading as complicated. Just when you feel the market conditions changing like it did in the last couple of days, you just change with the market. You just make adjustments. Like I said, some people don't agree with me, but I agree with when market volatility increase, you have to move your size out a little bit and decrease your size. So I decrease my size and move my stop a little bit. So I'm pretty much getting the same dollar amount risk. I just gave my trade a little bit more room to work. That's pretty much all I did, and I believe that, and my mentor actually believes that. So he taught me that, and he taught me just when the market changes, you change. You make adjustments, and you just go with the market. You keep the same, you don't change your strategy altogether. You keep the same strategy, but you just make adjustments where there need to be adjustments. So if the volatility shrink all the way, then you're going to have to make adjustments that way too. Now the volatility opened up, so you're going to have to make adjustments that way. So those are the things I wanted to talk about today. You guys know if you have any questions, you guys can either IM me or put it on my trading journal. I'll always answer questions, or if you have any questions or you want to know more about this and more about the dome. But yeah, so like I said, the only thing I really want to convey today, if you're looking at the dome and you're seeing it being light, like light levels, that's the reason why, because the volatility, and when they spoof, they don't want to get they don't want to get execute an order they don't really want. And then you have to think algos, some of that volume dried up just because the market's so volatile, because algo is pretty much based on getting a riskless trade, and this market's moving so fast that they don't want to step in front of this moving train sometime. So with those two dynamics going, you have a lot less volume on, you have a lot less orders on the dome. So that's pretty much what's going on today, guys. So if you guys have any questions, let me know. Have a good day.